welcome to From the 13th Floor, Listen to a Vet. I'm Professor Susan Watson-Turner, and here at TBJ Radio, right on the campus of Lehman College, the Brush Journal Radio, part of the Journalism Media Studies Department at Lehman College. We're here with We Belong Network and their show and podcast and guests from the 13th Floor. Listen to a vet. Now, vets really serve this country and serve everything that we have to do. And when they come home, what happens? We are here with the We Belong Network, WBN, to give them a voice. Some things that happen, we have no idea, the friends and families. So here now, I'm going to turn it over to the CEO of WBN, Mr. Richard Best, and he's going to introduce our wonderful guest for this afternoon. Stay tuned.
Good evening, listeners out there. My name is Richard Best. I'm CEO of WBN, We Belong Network, and we're here for the families and friends of veterans and the surrounding communities. I have with us an interesting story today, or topic. And we're going to start off by having our guest introduce himself and to tell us what he did, where he do it at, and how else he can benefit us.
Thank you very much. First of all, I'd like to thank you for having me today, so that way I can share this information and engage in this conversation. My name is Jamie Sanders. I'm with Nationwide Mortgage Bankers. We're out of Melville, New York, 68 Broad Hollow Road. And basically, I'm in the banking industry. I do residential as well as commercial banking. We cover 42 states. So a lot of times, my thing is to educate people as to what the process looks like, whether it's in New York or another state.
Okay, does that also include Veterans Administration loans, VA loans?
That's correct.
Okay. All right. Next, my co-host is Wendell Solano. Wendell?
Yes, thank you for the invitation once more. Great to have you, Jamie. Thank you so much, actually, for making time for us. I know how you had to flex around your schedule to be here today, and this show is going to be mind-blowing in terms of not only what is a VA loan. You can actually give us all that information, but also finances. It's a hot topic for veterans.
Absolutely. So let's just dive right on into it.
Sure.
Okay, well, we're here, since we are a show of veterans, for veterans, by veterans, how is it, or what do we have to do to become qualified for a VA loan?
Okay.
First, I'm sorry, what is a VA loan?
Well, a VA loan is basically a loan specifically for veterans, individuals, men and women who have sacrificed and served our country. So very basically, it's a banking product, a financial product that caters specifically to veterans.
Okay, now that can involve such as, let's just say for instance, myself, I'm a business owner, have a reasonably high credit score, my income level is over 100 grand. How do I qualify for a VA loan, and what's the procedure?
Well, basically the procedure, you mentioned a few things. You mentioned your income, you mentioned your asset base as far as how much reserves you may have. So basically there's a couple of factors that goes into the qualification process. One of them being, of course, we assess the credit to determine what your credit management history looks like. And if it's there's issues there, we help you position and address those issues if it's necessary to qualify you for the loan. And then after we look at the credit, we assess your income. And basically your income is, when it relates to qualifying, it's going to be contingent on the price of the property. So although you have a higher income, say $70,000 to $100,000 a year, it's going to be a situation where you have to shop within your means. So when I say that, basically I'm saying that you don't want to say earn $100,000 and shop for a house that costs $700,000. You want to also look in the 450, 500 range, something that's going to be more affordable, and then also increase your chances of approval. So, the other part of it is your assets, your reserves. So with a VA loan, it's not required that you have an asset base of reserves.
Which means
that a discretionary or extra money on the side that you may have in the case of emergencies.
Okay.
So with a VA, but it's always recommended so that you can position yourself for a better rate.
Yes.
And there's some, like, for instance, like a lot of veterans, they approach the purchase process, the home purchasing process, and with an understanding that they can get 100% financing, which is true. But when you're looking from the sales perspective, it's always advisable to put earnest money down in order to secure the property, although you're not required to put a down payment. So basic earnest money is good faith money that is given in good faith to secure the property so that the seller knows that you're really a serious buyer.
Okay, is there a percentage of this good faith money that you must put down, or not must, but willing to put down?
Well, not specifically. Again, with VA, there's no specific, and it really depends on if you're a reservist. In some cases, you can be required to put 5% down. So it's different between full service, reservists, and National Guard. For National Guard, in some cases, you may be required to put upwards to 10% down, because the benefits for the different branches are a little different, depending on the nature of how you served. But to answer your question, it's not a certain percentage that you are required to put down, but in certain cases, like hypothetically, if you were going for a traditional mortgage, and they said you required 5% down, that would be the money that you would put down for your earnest money, or your down payment to secure the contract with the realtor. And that would be applied toward your purchase or your closing costs.
All right, so let's play the other way around. I'm a veteran, just came out to service, have a job that is a little higher than minimum wage, I have a family to support, have no bank account. How does that play into the fact of me trying to get a VA loan?
Well, the bank account is necessary, only because they want to see, they kind of want to see what reserves, if you do have any, what you actually have in the bank, because you have a down payment and then you have closing costs. And this is the part where a lot of people get confused at, because the closing costs, of course, that encompasses the lending fees, title costs, and other soft costs that are involved with the origination process. So it'll be your closing costs, but your down payment is what your certificate of eligibility will cover, as a veteran. So that will cover the cost of the property itself, but then you have your closing costs. So now, with the closing costs, there's different options with the closing costs. So, like I brought that up just to pretty much reflect the fact that although you don't need the bank account to show that you have a reserve, but just in the event that there are closing costs that need to be satisfied, they want to make sure that you do have those closing costs to be able to satisfy the loan or to qualify for the loan. Right.
All right, so then that means that I just come out of the service with minimum income is pretty much out of the realm of rent or...
Well, I wouldn't say out of the realm of, I would never, dismiss it and say that not that you don't qualify. Well, you're not in position immediately to take advantage, but I can help you get there. I can show you how to position yourself. I can give you a roadmap. If you want to qualify, depending on what you're looking at, what your interests are. Now, if you want to qualify for that specific property or situation, this is what you need to do. This is what needs to be reflected.
Yes,
We can find a wife.
Yes.
Well, basically, it's we make an assessment to see what would be necessary for you to move forward.
Okay, now I'm sure my co-host here has a bunch of questions also, so let's give him a shot at it.
Thank you. So we're talking about guidance. How important is financial guidance for a veteran?
Well, I think it's essential for veterans, for any consumer, but specifically the veterans. This is who we're supporting and discussing today. But I would say it's necessary for not only for them to understand the mortgage process, but how it's going to impact them tax-wise, how it's going to impact if there's income associated with it. So, for instance, if you buy a four-family home, you reside in one unit, you have 3 more units. So there's income that's going to be derived from the purchase, from acquiring a home. So you have to assess to understand if it's going to impact any entitlements that you're receiving. And I'm referring to veterans benefits. I call them entitlements because I think that you guys are entitled. Veterans are entitled as opposed to a benefit is something that comes about from just association. But I think that each veteran has sacrificed in giving potentially everything, and as well as their family. So I think that they're entitled. I think that they're truly entitled. But the financial education is important because, like I said, you need to know how to position yourself, how to appropriate your funds. If you have other investments, how to leverage that, how to reflect that as collateral. Because some people look at collateral or assets as what you have in a bank. So really educating them as far as all the different income streams, all the different, asset allotments that they may have access to, and then also, just to help them understand what the back end is going to look like, after you close.
So what can you buy with a VA loan?
Well, you can buy anywhere from a 1 to 4 family home, and based on that, the underwriting process is a little different, being that you do have rental income. So, but you can qualify from anywhere from a 1 to a 4 family, and but over 4 family is considered commercial. So anything that's residential, you can qualify.
When you do commercial, is it a different process?
It's not a different process per se. It's a similar process. The underwriting is different. The way the bank assesses it and looks at it is different. The rates will be different, because you're looking at a situation where you have a primary residence somewhere where you're going to reside, as opposed to a commercial investment where the likelihood is that you're going to rent it out. So you're going to be originating, have rental income basically. So that's one factor, and then, like I said, the down payments when you're buying commercial properties are definitely different.
This is so interesting and such great information. We'll be right back here at from the 13th floor. Listen to Yvette with this great guest we have today. They're telling us all about finance, and to give our co-host an opportunity to pick his brain a little bit more. Right now, we're going to cut to a commercial.
I asked what kind of family she wanted. She said, a family like yours.
Learn more about adopting a teen at adoptuskids.org. You can't imagine the reward. Brought to you by the U.S. Department of Health and Human Services, Adopt US Kids, and the Ad Council.
Mario fue pintor más de 30 años. Un día me dijeron que pintara el marco por dentro y pinté el lado de afuera.
Si algo se nota diferente, podría ser Alzheimer. Es momento de hablarlo. Un mensaje del Alzheimer Association y the Ad Council.
I can't believe you found them.
He seems sorry.
We very clearly told him not to look up there.
I'm honestly impressed that he was able to do it.
Right? Did you balance on that big chair?
Yeah,
I guess he'll just know what his gifts are this year.
I really thought we had hit him well.
If they can find a presence, they can find a gun.
911, what is your emergency?
Every day, 8 kids and teens are unintentionally killed or injured by loaded and unlocked guns. Learn how to make your home safer at endfamilyfire.org. Brought to you by the Ad Council.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket, you spot miniature donut earrings. You lean in. That's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good.
Okay, we're back right here at TBJ Radio with We Belong Network. From the 13th floor, listen to Yvette. We have a guest here tonight that's telling us all about the finances. And we're picking up with co-host here, Wendell.
Yes, we left off at a very interesting topic. As a matter of fact, you have the opportunity to be a homeowner, and to summarize, you can also be a landlord, which turns into a business. So let's say I finish paying that loan. As a landlord, I'm very successful. Are you able to continue to use your VA loan to purchase another property?
Yes, you can.
For business purposes?
Yes, you can. This is the thing. The VA, you cannot have more than one outstanding VA loan within a term of, the industry standard is 5 years. Right. So you can own, say, a four-family veterans VA home, a four-family home with a VA loan, and you can live in that. You can own it for 5 years, but the catch is that you only have to live in it for 2 years.
Interesting.
Right. And it's not, and just let me just be a little more clearer. It's not that you have to keep it for at least 2 years. If you keep it less than 2 years, you will have to pay what they call capital gains. So if you reside in the home for at least 2 years and your gain is less than $250,000, then you're not you can avoid your capital gains taxes on that. What you've earned on the property.
How many veterans have you assisted with turning this into a business in your career?
Well, I've assisted. I've worked with, say, maybe about 4 veterans, but I didn't look. Well, we didn't work from a business perspective. Most of them were interested in primary residences, but I always encouraged them that it is potentially a business, that you can, after 1 year, for instance, a lot of veterans don't realize that you can actually refinance your original VA loan, pay off that loan, and you can actually purchase another home, because now what happens is you can, depending on how you structure it, because you don't have to, just because you started off as a VA loan with a VA loan, you don't have to end up with a VA loan. So what can happen is you can potentially get a conventional mortgage, which is a type of mortgage, and pay off that VA loan, and then would help you qualify so you can purchase another home with your VA entitlement.
Interesting. So really veterans are not using this as a business potential. I don't know if Mr. Best would like to add. He's a successful
being a veteran and being interested in the real estate market of properties. Let me ask you this. After a veteran purchases his home, and let's just say it's a startup home, all right? He lives in that for 2 years, and he's struggling to pay it off. But he's interested in moving his family to another bigger place. How does that affect him?
Okay. The key is justification. One of the things is that when the underwriters look at the loan, like I said, the industry standard is 5 years. So after 5 years under a VA loan, if you go and apply for another VA loan, whether it's like I said, if you pay off that loan, that original loan, and you want to originate another VA loan, it doesn't matter if it's right in the same vicinity, in the same area, you just want a bigger home. So and one of the justifications is a bigger home. Maybe your family has grown, so you need more space. So, a lot of that has to do with justification, just like with the interest rate reduction real estate loan, which is a VA-specific refinance. Basically, if you can justify that you're going to get a better rate, even if it's been 6 months, you can actually refinance. So a lot of veterans are not aware of that. So a lot of it is justification. So if you're looking to upgrade your housing because of the size of your family, you can. There's a couple options, but the key thing is that with that original VA loan, you wouldn't be able to qualify for another VA loan unless you have been there at least 2 years. So that's like a rule of thumb. Because you can buy, you can take out an FHA, you can take out a provincial, you can take out other types of loans, but when it relates to a VA loan specifically, there's a certain term that lenders are going to look at, unless you're moving to a different state. Now, if you say, well, listen, I live in New York, but, families migrating to New Jersey or another state, so I need to sell this home and I need to relocate my family out there. So in that type of circumstance, then the underwriting looks at it as like, okay, that makes sense. Everything has to make sense. You know what I mean? So.
Census is what it's all about, actually. So again, here we go with the interest rates. Does the interest rates climb because you're taking out additional loans, or how does that work, or how would that affect it?
Yes. Well, your interest rate would, the fact that you have a pre-existing house could be to your detriment or could be to your benefit. So it really depends on how much equity you have in the home.
Absolutely.
And
what do you mean by equity? What is
equity? Means how much value you have in your home compared to what you owe, as opposed to what the property is worth.
Right.
And the difference in between would be your equity.
Okay.
So now you can have a property that doesn't have any equity. It was just originated a couple of years ago. So you're paying down and you're paying on a regular basis, but it only has say $10,000 worth of equity. So the value is $500,000 and you owe $490. So it's not going to be looked at as favorable when the banks do underwriting on the loan. So it could work out for you or against you. But the key thing is, one of the key things is to make sure that you're maintaining those payments, on the existing mortgage. And then you just understand that when you buy the next home, when it relates to your housing expenses, that's going to be additional mortgage is going to be calculated into your housing expenses. So you're going to have to qualify. So your ratios may adjust, your income ratio, your debt to income ratio, and that's basically the comparison of what your overall debt is to how much you earn.
Right.
So, with that second home, it's going to change your ratio, of course. So with that being said, that's going to cause a fluctuation in your rate. It's going to cause your rate to go up.
Basically. So with that being said, you're talking about equity in the properties. Could you actually borrow on that equity? If you have any?
Yes, you can. You can borrow on that equity. If you were looking at purchasing another home, and you, in order to qualify, maybe this is an investment property, and a commercial property, you want to put 20% down, whatever the designation is. You can leverage your equity. And some institutions allow you to. They'll look at the equity and not require for you to pull the equity out. You know what I mean? So, but it differs a little bit between lender to lender. Each lender have niche programs, specific to their institution. So it will vary. But to answer your question, yes, you can leverage against or utilize the equity in an existing property.
Okay. Well, That's informative to know, isn't it?
Yeah, actually, I have a question with regards of, I know you put some interesting data with regards of, supporting veterans in New York. Can you walk us through a little bit of the data you brought for us?
Sure. Well, basically, I was just looking over some information related to how many veterans that actually occupy the state of New York, and based on that number, how many of those veterans are homeowners, and basically, we have over approximately $300,000 veterans that are not utilizing their veterans entitlements, and then the number is even greater when it relates to housing issues, in general, and other issues. So basically, the data is basically reflecting that out of total home ownership in the state, only 7% of that ownership is veterans. Right. And
that's a shame.
Yes, it is. Yes, it is.
I'm sorry, best thing like that, but I contribute that to them not knowing the lack of the information getting out there that they can qualify for a VA loan.
That's correct.
And a lot of them think, no, I'll never qualify because I don't have anything.
That's right.
Well, as opposed to having something and not having something, you still can qualify for a VA loan. Am I correct?
That's correct. That's correct. And again, it goes back to underwriting because everything is about security. So the bank is looking at, are you a good investment? So now you have your guarantee from the federal government, which helps out a lot. But at the same token, they still want to look at certain things just to kind of get a feel of who you are, and that's where the credit profile plays in very large. They want to know that you manage yourself, and just get a feel of what's going on in your life, your financial life, But you can, even though you have some challenges, depending on, and again, I always encourage people, this is a high-priced market, New York.
Yes.
So it's very costly to purchase a home or invest in New York. So I always encourage them to look at other markets, maybe Connecticut, depending on their personal situation, if they can commute. So I always encourage them to look at, more cost-effective scenarios that may fit their situation.
Okay. That's great.
I have a question, Mr. Best. We spoke about lack of knowledge from our veteran community. That 7% also might indicate that they're not empowered to go and ask for a VA loan because they don't have the knowledge. But my other question is, you worked for a while in this industry. How well marketed is the VA loan for veterans?
Well, to be honest with you, like you indicated, I've been in the industry for quite some time, about 20 years, and in my experience, a lot of financial professionals, first of all, they don't understand the veteran community, and secondly, they don't earn the same amount of money. So it comes down to a monetary thing.
Absolutely.
So a lot of loan professionals or mortgage professionals, financial professionals, they will, I've seen a lot of them steer veterans into other financial products as opposed to taking them through a VA because they know that they're going to earn less on a VA loan as opposed to a conventional loan or potentially a FHA or something like that.
It brings in other problems like loan payments for one.
Right.
There are a lot of different products.
Yes, it is. Yes, it is.
That you can fall victim to. With that being said,
we need to take a little break here. This is from the 13th floor. Listen to Yvette. All the things you need to know once you kind of separate yourself from the service. We're coming to you live from TBJ Radio, the Bronx Journal Radio at Lehman College.
Because the players get dribbling on it.
The dad joke. Corny, groan-worthy, but also one of the simplest ways to share a moment with your kids.
What did the buffalo say when he dropped his son off to school? Bye, son.
So take a moment to make your kid laugh, because dad jokes rule. Make your kid laugh today. Go to fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Hi, I'm Amine. Sometimes starting a conversation with a friend about mental health can feel awkward, but your support can make a huge difference. You know your friend's best, so if you feel like something's wrong, trust your instinct and reach out. Learn how to start the conversation at seizetheawkward.org.
Brought to you by the Ad Council, the American Foundation for Suicide Prevention, and the JED Foundation.
Mario fue pintor más de 30 años. Un día me dijeron que pintara el marco por dentro y pinté el lado de afuera.
Si algo se nota diferente podría ser Alzheimer. Es momento de hablarlo. Un mensaje de the Alzheimer Association y the Ad Council.
Wake up and text. Text and eat. Text and meet up with a friend you haven't seen in forever.
Hi.
Oh, hey. Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit StopTextsStopWrecks.org. A message from NHTSA and the Ad Council.
I can't believe you found them.
He's so sorry.
We very clearly told him not to look up there.
I'm honestly impressed that he was able to do it.
Right? Did he balance on that big chair?
Yeah, I mean, I guess he'll just know what his gifts are this year.
I really thought we had hit him in the...
If they can find their presents, they can find a gun.
911, what is your emergency?
Every day, 8 kids and teens are unintentionally killed or injured by loaded and unlocked guns. Learn how to make your home safer at endfamilyfire.org. Brought to you by the Ad Council and End Family Fire.
Okay, we're back here at WBN Network by Veterans for Veterans, a show from the 13th floor. Listen to Yvette give all kinds of great financial information today.
Okay, just to let you know who you're speaking with again, my name is Richard Best, CEO of WBN, We Belong Network, and my co-host is Wanda Solano of WBN, and we're here sitting with
Jamie Sanders.
I'm sorry, Jamie Sanders, wrong Reggie. Okay, now we just left off with some very interesting topics, and we have some more still to come, but I'm going to digress and pass it on to my co-host and let him finish his.
Yes, one of the facts of the statistics that you read was that 7% of veterans being homeowners. It's a mixture of things, not knowing, not empowered to do so, and maybe they're like Mr. Vest said, they just came out of the Army, they don't have that income to buy a house. So how is that? If I'm a veteran, I come to your office and I say, well, I want to buy a house, but you tell me, hold on, let's figure this out. You're not ready yet.
Right.
How can you advise me, and what direction will you put me in order for me to be a successful homeowner?
Well, it depends on the individual. Again, it's I individualize every engagement. And depending on where you're at, for instance, if you're looking to subsidize your existing income or to raise your existing income, there's things that veterans, again, they're entitled to, like vendor's license. You can, as a veteran, you can, qualifying for a vendor's license is just a matter of applying, as opposed to a civilian, which they have to go through a lot of red tape. Now, as a vendor, there's different things that you can do. You can partner, or you can, of course, take up the vending upon yourself and, do this as a side business, and that would complement your existing income. But, there's other mediums, but the key thing is to, see how you can potentially raise your income, so that way you can better position yourself. And there's other ways as well, now it's depending on what you have and don't have, but you said that, your income is not really there, so you can, bring in essentially family members and, things like that, like your spouse or that can complement your existing income. So there's different scenarios, and it's really an individualized situation. But the key thing is we have to strategize on how to change, that 40,000 into a 50,000 or 60,000, and basically I network with a team of professionals, and they work in different areas. Some of them work in wealth building, and some of them work in business, and basically what they do is they consult people on how to creatively get into different aspects of business, depending on what your interest is. So, and that's the other thing that I do, in working with the community, I mine for resources. So I have I use my network to refer people, if I feel that, there's a qualifying situation. So I just try to hybrid my professional service or products with my social position, and I try to steer them in that. And again, my circle of professionals that work with me.
And that circle of professionals involve investors, that can help you also. It's important to save, but how important is it for a veteran to understand the importance of investments? Like for example, buying bonds and stocks.
Right. So, it's very important because you're talking about a situation where you can, you're earning 1.2% as opposed to a situation where you can earn 7%. So, it's important to help people understand, veterans understand how to help your money work for you on a maximum level. You know what I'm saying? Not just to say, well, listen, I have $50,000 in the bank. Yeah, but what are you getting? 0.225, the percentage is very, very, very low. So you're really not, your money's not really working for you. It's not growing. So to take that $50,000 or $25,000 of that and say, well, listen, why don't you and put some into this investment vehicle so that way you can kind of diversify yourself. If you want to be safe, you still have the 25, because you don't understand this, so you're probably feeling a little uneasy. So let's do this. Let's put the 25 here, and then you still have 25 there, and then you can see the growth potential. You can see the growth in your investment, and then maybe you want to migrate some of that up. So just helping them, really understand that your money can work for you while you're out here working a job or doing, you have a small business or whatever you do. At the same token, you can have your money. You can put it in other investment vehicles so it can grow at a higher rate.
Yeah, but let's just also explain to the listening audience that diversity is key. And not only that your potential of loss is still there too. So it's not always that because you buy stocks or bonds that it's going to grow.
That's correct.
All right, so it's your choice of your investment vehicles. Real estate for one. You can buy yourself a multi-family home and live in it and rent out the other portion of your home.
Correct.
And that gives you that same income increase that you're looking for.
Yes.
And also gives you a little higher step on your credit score, or not so much your credit score, but so much that when you go to the bank to apply for a loan, they will look at it as an asset. So that's really important for our listeners to understand. That we're not telling you just to invest in stocks or bonds or any other vehicle.
That's correct.
What we're saying to you is that your investment increases. That's what we're looking at and what the banks will be looking at. Okay?
Yeah, and it's very clear. You want to, with taking risks, there's an opportunity for growth, or not to grow.
My thing is, I'm not a financial advisor, so I can't really give financial advice. I can't give financial advice. I can only speak to the potential of things, but I do have licensed professionals that, that I refer my clients to, so that they can understand the potential for growth and loss when it relates to investments.
Yes, that you speak to a qualified representative or a qualified person who is in that field.
That's correct.
So they can further your assets or your investments along.
Are there any charges when you apply for a VA loan?
Yes, there are. There's what they call a funding fee, which just increased.
How much?
2020.
How much is the increase?
So you're looking at where they were capped or restricted from charging more than 1.5% or 1.5%. 1.5 point. Now it's at 2.3. So you're going to see the emergence of a lot of financial or banking professionals trying to service the veteran community because they see the potential for gain. So it's not about really helping the veterans. So you have to, and that goes back to education. It's important that you're educated, and I always encourage my clients or people that I engage, like, listen, even if you don't use my services, you don't use my products, if you have any question, if you're speaking with anybody and you're not sure, don't ever hesitate to pick up the phone. You know what I'm saying? I'm not emotional like that. You're going to be okay.
Interest when you said points. Tell us what points are and how does that affect your own status?
Okay, well, points are basically percentage basis that the institution charges based on origination, and again, that could it could vary depending on your rating, the quality of your loan, your credit rating, different factors come into play, which could really dictate how that plays out.
Either raise or lower your point status.
That's right.
And again, what is a point?
Well, a point is I'll draw it out like this. Say you have $100, a point would be $1. You know what I mean? So basically it's 1% or a percentage of whatever the total cost is.
Right. Okay. So if the total cost is $10 and you have a 4% or 4 points,
right?
Then the obvious is $4.
That's right.
Okay. So just letting our listeners know how to deal with points when they go talk to a professional about loans.
That's correct.
So when they tell you about 10 points, wait a minute now. I'm telling you about 10 points.
You should always ask as many questions as possible. If you can speak to a couple of professionals in the industry, I would always advise that because professionals tend to act a little bit better when they know that you're speaking with someone else.
Yes, that's right. Information is important, and knowledge is important.
Yes,
so
it is.
the more you are geared up with knowledge, the better you can negotiate your position.
Yes, and when I asked about the potential for income, my thing is I always try to share creative ways of how you can potentially position yourself. Now, again, if you're, you have market value properties, you have investment properties, and I kind of disencourage my clients not to go on with their first purchase with an investment property. As far as a fixer-upper, you can get an investment property, but not a fixer-upper where you have to put a lot of work into it. Because usually those types of properties have the most potential for gain as far as after repair value, as opposed to the initial purchase price. So you may potentially earn $200,000, in the transaction, as opposed to just earning, a lot less.
A lot less, yeah.
Right. So, so the potential for gain is greater, but I always, encourage them to find something that you're not going to have to put a lot of work into, and that will be more manageable, But where I was going with this is that in the event that you do purchase a property and say the value goes up, and again, you have that $100,000, $200,000 worth of equity. You can take that equity out and you can utilize that for a business venture, or if you have a business idea that you want to get up and move it. So I encourage veterans to look at creative approaches.
Okay.
Great, we got to take a break here. It's some wonderful information here that's right here on WBN Radio.
All right.
Text and eat. Text and meet up with a friend you haven't seen in forever.
Hi.
Oh, hey. Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit StopTextsStopWrecks.org. A message from NHTSA and the Ad Council.
I asked what kind of family she wanted. She said, a family like yours.
Learn more about adopting a teen at AdoptUSKids.org. You can imagine the reward. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Mario fue pintor más de 30 años. Un día me dije que pintara el marco por dentro y pinté el lado de afuera.
Si algo se nota diferente, podría ser Alzheimer. Es momento de hablarlo. Un mensaje de the Alzheimer Association y the Ad Council.
Why's the basketball court all wet? Because the players kept dribbling on it.
A dad joke. Corny, groan-worthy, but also one of the simplest ways to share a moment with your kids.
What did the buffalo say when he dropped his son off to school? Bye, son.
So take a moment to make your kid laugh, because dad jokes rule. Make your kid laugh today. Go to fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Hi, I'm Amine. Sometimes starting a conversation with a friend about mental health. Hi, I'm Amine. Sometimes starting a conversation with a friend about mental health can feel awkward, but your support can make a huge difference. You know your friend's best, so if you feel like something's wrong, trust your instinct and reach out. Learn how to start the conversation at seizetheawkward.org.
Brought to you by the Ad Council, the American Foundation.
We're back here at We Belong Network from the 13th floor. Talk and listen to that. We have great information going on today about the finances, and everybody knows that's very important. Wendell?
Yes, I was a little mesmerized with regards of, first and foremost, recognize that you serve our veterans very well. Thank you for that. And as you mentioned, it's not a lucrative business for someone like yourself. And perhaps our veterans need to be encouraged when they go into financial institutions that it's a loss more for them, and that they still have to challenge those workers to give you that.
Well, you know what it is. You have to also consider that when you walk inside of a bank, that you're walking into a business. And the means of a business is to gain money, is to make money. And the products that they sell are the money makers.
Exactly.
So if they go in there, if you walk into a bank and says, look, I'm looking for a VA loan, and be specific about a VA loan, then they will address that matter. But if you walk in there and says, I'm looking for a loan, then of course they're going to push the higher product to you. Whether you can afford it or not, they'll get you later. You know. But there are different avenues that they go through, or that education and knowledge is key, is important. Before you walk into any institution, you should be well informed. You should know what you want and know whether they can offer you what it is that you came in there and asked them.
Absolutely.
So as long as you have that knowledge in your being, then we're good. So we're going to go back to, again, summarize what we're talking about, these VA loans. What is a VA loan? How does one get one? Whether you need one or not, And when you go, which banking institution, or lack of a better word, lending institution, because there are different vehicles, different lending institutions that you can go to get a VA loan. So could you expound on that for us?
Well, yes. Me specifically, I work with a mortgage bank, which we do what they call portfolio our loans. So we actually hold and service a lot of our loans, as opposed to selling the loans.
Right, selling them out to partners, different pieces.
Right. As opposed to a brokerage, which pre-sells a mortgage broker as opposed to a mortgage bank. What they do is they pre-sell their loan to different investors. Right. So in addition to pre-selling their loans, they sometimes they charge additional fees as well. Because they're not. Sure. That's right. That is correct. Because they're not the ones that's going to be servicing the loan, and so they get their money on the front end. And then you also have the option of a traditional retail bank, which your savings thrift bank, where you people that give you your 0.005%. And they have the dum lollipops at the top.
That's how they get you.
Take a penalty.
That's how they get you. Lollipops.
That's why I say information is key when you're talking about going into any lending institution and all. You have to, first of all, gear yourself up to go on it.
Correct.
Second of all, you have to know what you need or want. And then you have to know what your limitations are.
Correct.
So that the banking institutions could serve you better.
That is correct.
Because if you go in with the knowledge of what you need and want, and you can pretty much dictate the services that you get.
That is correct.
Okay?
That is correct.
All right. So that brings us down to, all right, we know a VA loan is out there. We know that most veterans can qualify for them. We know now through the information that you're giving us that there are different kinds of assets or different kinds of housing markets out there that brings you to the point of wanting to buy a home or buy assets. What did you call it? Asset-based mortgage.
Mortgage. Well, I spoke about leveraging your assets.
Yes.
You know what I'm saying? And as opposed to liquefying your asset or extracting the equity out of your home, I spoke about leveraging the equity.
Yes.
So that the institution can see that you have access to that equity, so that you're a better investment. You're secure. So if you run into any problems, you can always tap into that equity to remedy whatever issues that you're having.
Yes, that's very, very important because people buy homes and you buy them for two reasons. One, as asset, to have as an asset, and secondly, to live in. Most people, turn it around the other way. Your home is actually who you are, where you live, but it's also your future. It's also your investment in your future and who you are. So you can take that home and resell it, hopefully for a larger amount.
Of course, all the time.
Right. That's only determined upon who you have as a broker, your knowledge in real estate. But that's also, you also go to a professional for that. So now, if you buy a home and you buy multiple dwelling and you're living in it and you're collecting rents, okay, that might sound easy, but it's not, because it brings on other issues. Okay, you have to inform yourself about real estate and the laws and the practices of realtors and so on and so forth, along with your banking institutions. So that means you have two different institutions here. Now how they work together depends on the individual, how they work with the banking institutions or all institutions.
That's correct.
Okay, so it's not an automatic thing that you can go to the bank and get the loan and then get tenants in your apartment and start collecting rents. There are also laws and all kind of other legalities that you have to face.
If I may interject, you brought up something that's very important, and I know we're limited on time, but the intimidation factor.
Yes.
The management aspect of things. So, and that's definitely a consideration that you have to make. Well, yeah, you have to make when you considering getting a multifamily where you're going to be renting out apartments and you're going to have tenancy. Because some people, I've heard people say, I don't want to buy a house, it's just too much. That's why I live in an apartment. It's too much to manage, and it's too much to, I got to worry about taxes, and sometimes it's just the way it's projected from the outside, and it's all about, managing and understanding education, like Window Express, really in yourself, really knowing what your options are. They have property management companies, that can assist you with that process, and a lot of times, a lot of your realtor, will help you with the management aspect of things. So there are options when it relates to management, but the other part of it is, whatever repairs or anything like that you may have, just being in a position to satisfy that.
Well, Jamie, you're such a knowledgeable person when it comes to this subject, and the appreciation from the WBN Network is the veterans community in general. We're so satisfied. And my last question, and I know we don't limit it a little bit in time, but what inspired you to do all this, to come through this journey?
Well, a big part of my inspiration is my son, who is active Marine.
Hoorah!
Yeah, hoorah. My thing is one day my son is going to be a veteran.
Yes.
You know what I mean?
Absolutely.
So if I can preemptively get in front of, this journey, and I can, lockstep with my veteran community, that is going to help me position myself to better support my son. And not only that, I come from a veteran family. All of my uncles are veterans from various divisions of armed forces. So that's part of it, but not, at the core of it, I think it's because of, I just see the struggles of veterans, and I just admire veterans so much for the sacrifice, and really what you guys have given and still give, and I think it's just incredible, and I think you guys are very wise because you've seen some things. So in spite of what some veterans may think of themselves, I always encourage them. So, and I just think that you're a critical part of our, our macro community, the entire, as humanity. I think that you play a very critical role in bringing balance back to humanity and things on an international level, because I've seen a lot of veterans, the solidarity that they have, the camaraderie that they have, you know what I mean? It's just, and when I saw how the veterans worked together and they supported each other no matter what, it really touched me. It really is like, we need that out here.
Well, we want to thank you again for being here. We really appreciate your knowledge and information that you shared with us. And I just want to say, from WBN, We Belong Network, that we would love to have you back to talk in details about some of the services and some of the knowledge and wisdom that you have.
Where can veterans contact you right before we leave? We need veterans to know how they can contact you.
Okay. First of all, the best medium to contact me would be my direct line, which would be 914-497-2161. Again, that's 914-497-2161. That's my direct mobile. That's your brain picking mechanism where you can just call me to ask any questions that you may have. And the reason why I encourage you to call me on my mobile number, because I'm a lot, often out in the field, and I just want to make sure that I can respond to you immediately, and that's the best response. And not only that, my office is in Long Island. I live in Westchester.
Okay.
So a lot of times I am in Westchester, and but I felt it was necessary for me to bring those resources out of Long Island to make it available to our veteran population in the Bronx and Westchester.
Give us our number one more time.
Yes, that number is 914-497-2161, and my email address would be jsanders. Again, jsanders at nmbnow.com. Again, that's jsanders, JSANDERS, at nmbnow.com. And if you also put jsanders at nmbmortgage.com, it would also get to me. We just recently changed our URL, which is the red address. So, but no matter which address you put in, it will come to my inbox. So, but like I indicated, I encourage you to call me.
Thank you.
Great. What a great show. What great information. We are here from the 13th floor. Listen to a vet. Right here at WBN Network and TBJ Radio at Lehman College. I'm Professor Susan Watson Turner, and it was so great to have you here in the studio, and we're so happy about empowering people with resources and information. Join us next week as we listen to a vet.